Hello and welcome back to a beautifully sunny London. The term currency war is making a comeback at the moment and was one of the top subjects of discussion at the recent G20. I've been to the offices of IG to talk with Chris Beauchamp about this very topic. Well, Japan was the main focus going into this G20 summit, and they came out of it quite well, essentially.
Well, yes, we had the G7 statement from earlier in the week, which they then had to clarify. It's widely seen that Japan was the focus of discussions at the G20. It's the rise in the yen versus the dollar being the key element, really. The policies put in place by the new government are very important, really. But of course, there are other offenders, shall we say, in the currency wars besides Japan, and that's what the G20 perhaps focused more on over the last weekend. Yeah,
I'm wondering why Japan did come out of it so well. Is it just a case that Japan is still such an integral part of the world economy? Because people forget it's still the third largest economy in the world, that it's in everyone's benefit to see a strong Japan.
I think that's certainly an element of the strength of the Japanese economy is vital to everyone else as well. But it's also perhaps the way that Japan doesn't, in a sense, mind being castigated as the main offender. They're doing this for a reason. They know why they're doing it and they're comfortable with it. Other countries may be slightly more touchy, shall we say, if they were marked out as currency offenders.
Yeah, because it's all hypocritical, isn't it? Because pretty much all the major economies are at it to some sort of extent.
Well, exactly. This is the buzz phrase at the moment, currency wars. And whilst they may not be sort of doing it with clear intent, that's the net result, is everyone trying to weaken their currency to boost exports. The problem is, of course, we can't have everyone doing that. We can't all have weak currencies. Someone has to have a stronger currency, and that's what Switzerland and Japan have been suffering from.
Sure. We often focus on the countries like Japan and China, but there's other countries like India and Brazil who also really lose out from the ultra-loose monetary policy from the likes of the Fed and the Bank of England.
Well, exactly. These two countries are not quite as integral, shall we say. They're still very important as emerging market economies, and really they're also, the US is very keen to keep them on side, especially when it comes to discussions with the Chinese. We know how the long-standing antagonism between Beijing and Washington plays out in other parts of the world.
Yep. Just to change tack totally, obviously you follow the FTSE very closely. Do you see much momentum there to push us past, well, towards 6,400?
It has been the case that upward momentum has been lacking of late. I think investors look back on the excellent run we've had and think, well, how much further is there to go? The main event preying on their mind is the sequester in the US, and I think that will limit progress as we head into the end of February. But then again, US politicians have a habit of pulling a deal out at the last minute, which could well push us beyond 6,400 in the first half of the year.
Well, that's all for the moment. The next edition of London Direct will be with Open Europe, and we'll be discussing the Italian election. But for now, goodbye.